Good evening, guys. It's Saturday, October 29th. My name is Dave Coker, and this is Talking About Finance. And once again, my friends, we meet here in this brief interlude between Friday and Monday. Those 5 compressed days when fortunes can be made and fortunes can be lost. But we all know the secret. We don't trade. We buy regularly. We buy and we hold, and we buy and buy and buy. We buy stocks. We buy bonds. We buy bullion. We buy cryptocurrencies. We buy and we never sell. Because building wealth, protecting wealth, isn't about entertaining some fantasy that we're suddenly super slick traders. No, that's what the social media crowd does when they're trying to sell you something. Every one of those clowns on social media that boast about profits are trying to sell you something. Could be a course, could be a newsletter, could be a Gumtree, I don't care. Compared to what I do here. Compared to what I do on Medium. I give it away. A lot of it is based upon stuff I sell to investment banks. But a lot of it, like what we're going to talk about tonight, is based upon what me and my friends, about 50, 75, I think, numbers have been growing, investment banking professionals on a private Telegram channel, talk about all week. We just bounce memes back and forth 24/7. We accept that markets go up. We accept that markets go down, and we seek the path of least resistance to building wealth. We stay out of cash as much as possible. Because in this macro, holding cash is not to be tolerated. You're just losing money. So last week, the S&P 500 was up about 3.25% on the week. Now it's down about 18% year to date. The VIX traded down from 29.69 to 25.75. Nice drop. But what will next week bring? We still haven't seen the big blow-off where the VIX is trading at 40 or higher for a sustained period. The 10-year note closed the week at 4.01%. It's down 0.2% week on week, up about 2.5% year to date. Oil, WTIC, I was asked, West Texas Intermediate Crude, closed the week at 88.19. It's up about 3.7% week on week and up about 17.3% year to date. So what is the summer in Essex? We headed into London today. It was 20 degrees. We saw the Cezanne show at Tate Modern. Very, very busy. So we didn't stick around too long. We're members, so we'll go back in a few weeks when it's a little quieter. And on the way home, we went to the pub for pints and dinner. Traditional Saturday night in England. What we're seeing on the ground still doesn't match what the media is talking about. There's a lot of people out there. There's a lot of activity out there. I sense a lot of optimism. And just like the night is young, the year is young. We're just going to have to see what the future brings. Until then, we don't change our pace. We invest. We invest regularly. We invest heavily. And when the unpleasantness that is called inflation passes, we'll all be in better shape. So you know the routine, guys. 7 slides for 7 days. Let's rock. Let's take a look over here at S&P 500 sectors, specifically non USD revenue, something I put in my market research to my clients about 2 weeks ago, propagated into Medium. Really interesting to think about different sectors and their exposure to non-US dollar revenue, because we know right now the dollar is trading at record highs or near record highs, and we know that in the markets, the foreign exchange markets, it's all cyclical. Sure, the dollar's strong now. It's super strong. It's not going to stay super strong forever. It will correct. And then all their factors remaining equal, sectors like information technology, materials, they're going to see a tailwind. So start to think about that when you're building your portfolios or adding to your portfolios. Another thing to think about, and I'm speaking to the Americans in the audience tonight. Yes, your corporate masters really thank you. What I've got here is I've got off the wonderful Fred, I've got 2 time series, and we're looking at federal government tax receipts. We're looking at taxes on corporate income, we're looking at taxes on personal income, and the blue line is personal. The black line is corporate, and look who pays the most. My gosh, this is absolutely incredible, isn't it? Yeah. Somehow corporations have changed the structure of the tax code such that they're paying roughly the same. If you look at the black line, in particular from 2000 on, it's roughly the same. But look at that blue line since 2000. In particular, look at it since the pandemic caused recession. My God, it's spiked. It's reached an incredible high. One thing we do have to ask about when we're talking about inflation, we're talking about markets, we need to understand what the Fed is going to go up to, what the Fed is doing. They're getting a lot of criticism now, and I have to believe that I'm in that camp as well. I have to tell you I'm in that camp as well, because the Fed is considering a basket of what we call lagging indicators. And yeah, once again on another Medium article, straight off stuff I sold my banking clients, I look at Fed fund futures, and next week we're going to see another 75 basis point hike. The economy is starting to slow. We're starting to see real stress in some sectors of the economy. And yet they're going to do it again. My God, it's absolutely amazing. And this is going to be driving yields higher. It's just the way these things work. Keep in mind, guys, the Fed controls only the short end of the yield curve. Everything else is driven by market intermediaries. And here we're looking at the 30-year bond, and you can see here, we're looking at 3-month changes, and the TA guys are going nuts about this. They see a classical breakout pattern. Falling wedge, descending wedge, whatever you want to call it. Yeah, I do have time for TA. And I do think that bond yields are going to be spiking higher, especially if the Fed is committed, as Fed futures are showing us, to continue to raise interest rates into the first half of 2023. Everything's going to correct. It's really amazing. And guys, this is really wild. Somebody put this up, this young lady put this in the channel. I haven't read this book by Rickenbacker. I did buy it, Death of the Dollar, published in '68. I wish I could have gotten it on Kindle. If anybody knows how to get a PDF or a Mobi on it, please drop me a line in the comments or DM me. But I got my hands on a paperback. Oh, my poor eyes. It's a used paperback, too. Oh, it's covered in tears. I haven't read it yet. It's supposed to be a very, very fascinating book. A couple people on the channel have read it. I can tell you, though, I've read Ferguson's When Money Dies. It's amazing. I read this about 15 years ago. It's the story of the Weimar Republic, but in great detail that we never saw before. Because this guy Ferguson got a hold of some diaries of the Weimar, and it goes day by day in some circumstances, some cases I should say, describing the macro changes. And yes, now you know why. In March of 2019, I moved 71% of my retirement assets into gold and silver. That trade's worked out okay so far. I'm not getting the big payoff yet, but I'm patient. I'm willing to hold on to that for a long time. I think I shared with you when I last went long gold and silver, 2004, 2005, it took me a long time. It wasn't until 2014 that I finally closed the last of that trade. I closed it, all the gold and silver I had, paid the taxes because I did that in my taxable account at that time, and I bought 4 houses and paid cash. This time the money's in my retirement account. Maybe I can finally stop working. I don't know. I don't care. I just like to work, right? But in any case, yeah, I've got all that money in my retirement account because I believe those days are coming again. And here's a good one off Stock Money Lizards. Didn't do the chart myself, wouldn't take credit for it. But what they're doing is they're taking a look at cycles with Bitcoin, and they're looking at Fibonacci retracements, and they're looking at local tops, and they're calling it. It's another buying opportunity. We're nowhere right into deep Bitcoin winter right now. I'm writing a paper. I wrote it already for my banking clients, and I'll share it on Medium in a few days. We're only about 11 months into Bitcoin winter right now. Typically, a Bitcoin winter lasts anywhere from 38 to 34 months. So we'll have to see. Maybe this process will be accelerated a little bit. Don't know, don't care. Because we just buy Bitcoin every Friday, don't we? We've been doing it for years. Bitcoin, and for about 18 months, Ripple. And part of the reason I'm so bullish on Bitcoin is because I understand the technology, I understand the currency very well. The key takeaway that you need to understand here, guys, is that there will only be 21 million Bitcoin ever. We've already minted a little bit north of 19 million. And the 20 millionth Bitcoin will be mined in 2025. Not my tweet. I'd have to go back and look at the numbers. Sounds about right to me. That in 2025, after the next halving, which takes place in May of 2024, when production is cut by 50%, we'll have mined the 20th million Bitcoin. Now, keep in mind adoption is still well below 10%. As the regulatory framework, and check my blog out, FinTech Flash News, as the regulatory framework becomes more entrenched, more built out, more regularized, we're going to see a huge amount of institutional money moving into Bitcoin because of pressure from retail clients that want to own Bitcoin, but they don't want to do what I do and what maybe some of you guys do, where we juggle hardware wallets, or we just hope that things will go well in the exchange and we won't lose our coins. No, I want full custody. Even though I'm quite comfortable with Trezors and ledgers, I want full custody, guys. I want to give a third party, a licensed, fully regulated financial intermediary, my Bitcoin, my Ripple, and not have to hold it myself. Because that's what I do with my stocks. That's what I do with my bonds. That's what I do with my gold. That's what I do with all my other assets. I want to do the same with Bitcoin. Those days are coming. So once again, if you're not in it, consider moving into some Bitcoin. And dollar cost averaging. Don't go rushing in and put, $10,000, $100,000 in. It's garbage. Just buy $100 a week. Buy $10 a week. Buy $1 a week. It doesn't really matter. As long as you're buying. We call this stacking sats. All right, guys, that's it for this week. Been a real pleasure. You're going to make a bucket of money next week. Just get in that market, buy, and hold on. Take care, guys.